Overweight. So clients that have an allocation to equities of 40%, and it's now 50%, we're talking to them about trimming and moving that money into 4% tax-free bonds right now. So keeping a core allocation, but taking advantage of what's the opportunity is in municipal bonds.
But so you still like munis?
Yeah.
And you really think 50% of your portfolio in equities is too high right now?
Depends on the client. If a client is set up with an asset allocation of 50%, it goes up to 60%, it's time to discuss trimming it back. Now, that's not saying this could be one to get out of the opportunity of artificial intelligence. I mean, we have seen in the last 20 years everything from digitization to mobility to internet to mobile to the cloud, and now we're at the forefront of artificial intelligence. We're not looking to step off of that, okay? So it's important to keep a position in large cap technology, but look at the overall risk every client wants to take.
But you're making what is essentially a valuation call. So do you not, I mean, I get the idea that, well, you can't really have any more multiple expansion. I mean, how are you going to do that? Are you doubtful that earnings are going to be good enough to justify more moves higher, that sort of justify where the multiple currently is?
The earnings expectations are elevated, 14% growth this year and next year.
And you think that's too much?
I think the economy is doing very well. It's possible. But the decision to trim very slightly for clients is just simply, some clients really have a focus on the return of capital is more important than the return on the capital.
Well, that's because you have very, very wealthy clients. That's why, and you do well. That's why you're number 4 on the, I think you're number 4 on the top 100 financial advisors list last year for Barron's.
We have all sorts of clients. Thank you, though. And our job is to really align portfolios with their risk metrics and how much volatility they want to take.
What about the broadening story? Do you believe in it? Not so much? You just said the economy's strong.
Our overweight is in utilities and large cap tech. We do own a value component in our portfolios, but we're long-term holders of technology, and it has been amazing. It will continue to be amazing.
Did the Fed chair say anything yesterday that, you know, caught your eye, that said, you know what, that's important, I need to pay attention more to that?
No, the Fed actually is a big yawn right now, which is good. I don't think the market needs rate cuts to go higher. It needs earnings. That's the bouncing ball. Earnings and operating cash flow is what to follow. So the Fed could be on hold, and that to me is perfect.
But I mean, if you think the next move is eventually going to be another cut, isn't that good for stocks?
Potentially, but here's the issue. For years, we were worrying about the Fed tightened 500 basis points. Is it going to cause recession? What's it going to do to earnings? So that was 24 and 23 story. In 25, we're concerned about actual Washington's policies and how it'll impact different sectors in the market. So risks have changed. Economy's strong. Fed's out of the picture. Let's focus on what's coming out of Washington and new policies.
Take care of those very wealthy clients of yours, okay?
Looking forward to you being one.
Yeah. Number 4 on the Barron's Top 100 Financial Advisors list of 2024 is Richard Saperstein of Hightower. It's good to see you again.
Likewise, Scott.
All right, thanks. Up next, hedge fund Elliott issuing a warning on crypto today. We do have those details next. About 25 from the bell. Back to Pippa now for a look at the stocks that she is watching. Tell us what you see now.
Well, Scott, Hewlett-Packard Enterprise is in the red after the Department of Justice sued to block its proposed $14 billion acquisition of Juniper Networks, saying it would eliminate competition and raise prices. In a statement, the company's saying they strongly oppose that decision, and shares of Juniper Networks are down about 2%. And Las Vegas Sands jumping double digits. The casino's Q4 results were mixed, but the company did see strong results out of Singapore and a boost of optimism surrounding China's economic recovery that is lifting shares of other casino names, including Wynn, Caesars, and MGM. Scott?
Good stuff, Pippa. Thank you for that. Pippa Stevens. Up next, hedge fund Elliott raising the red flag on crypto. We've got the details just after this break. Closing bell. Coming right back.
exit.com.
We're back on the bell. Hedge fund Elliott out with a new investor letter with a warning on crypto. Leslie Picker following that story for us. What are they saying, Les?
Hey, Scott. So the Financial Times obtained a letter from the $70 billion hedge fund to its investors. And in it, Elliott is once again alarmed by crypto, which the firm says is, quote, ground zero for the speculative frenzy across markets. Elliott said the, quote, inevitable collapse of the crypto bubble could wreak havoc in ways we can't anticipate. Elliott takes particular issue with the threat crypto may pose to the dollar and its standing as the reserve currency. The letter said that marginalizing the dollar was profoundly dangerous. Elliott highlighted the millions of dollars spent helping crypto supporting politicians get elected in this latest cycle, according to the FT. Singer has long been a foe of crypto, going back to at least 2014, having historically called it a fraud and a scam. But Bitcoin in particular has surged since President Trump was elected, more recently leveling out around the $105,000 mark. The president signed an executive order to promote leadership in digital assets and also launched an eponymous meme coin. Trump media said yesterday it would expand into financial services that would invest in crypto and other assets, so clearly providing a boost to Bitcoin and other crypto areas. Scott.
It's interesting because I believe, and you probably know this better than me at this point, Paul Singer, who runs Elliott, I'm not sure if he's been a supporter of President Trump financially over the past couple of years as he was campaigning for another run at the White House, but I believe he was supportive of him in some ways, at least has met with him, which is interesting in and of itself, that one of the reasons you've gotten the boost in crypto, as you said, since the election was because of the Trump White House support of it. But yet the red flags and the alarm bells going off inside Elliott.
Yeah, no, I actually double checked Open Secrets just to make sure I got my facts straight. And he is still indeed. He donated to Trump and a PAC related to the Trump reelection campaign in 2024, as well as a whole host of Republican candidates as well. So clearly this is an issue that they disagree on. And he is joined by a lot of hedge fund managers who have come out against crypto over the years. Some you hear kind of a more friendly tune ever since. Others, such as Singer, and probably I would put Diamond in that camp too, saying that they don't believe there's much to it, under the surface.
Leslie, thank you. It's interesting. Guys, I'm just going to talk directly to the control room here because stocks have turned negative. That's Leslie Picker. Can we show the market, guys? Because I see a headline here as the Dow is now red. We were even thinking about the possibility of a new record closing high for the Dow. I'm seeing headlines that the president is going to announce tariffs on Canada and Mexico of 25% because of fentanyl. It has obviously had an impact. If we could even show an intraday chart, guys. Megan Casella, I'm going to bring her in right now. She has more information on this, but I just didn't want to wait as I saw the market sort of falling apart, Megan, on this news.
Scott, absolutely. And we have just a little bit more information. So the president right now is signing executive orders in the Oval Office with reporters. We have not yet seen a video feed from that press event, but he was asked a question on tariffs. This is as the deadline is looming for Saturday, when he had previously threatened 25% tariffs on Canada and Mexico. And according to the Pool reporter, he was asked this question on tariffs, and he says, I will be putting the tariff of 25% on Canada and Mexico. He said oil would not be a part of that and that it was because of fentanyl. But Scott, that is all we know at this point. So we don't yet know if that definitely will be taking effect on Saturday. We don't yet know if negotiations, as I had previously been told, with Canada and Mexico are still ongoing to try to avoid those tariffs. So still some gray area there, but clearly a market reaction now that Trump is saying he will be putting that 25% tariff on our North American neighbors.
Yeah, it's a many times a headline-driven market, as we've learned. Megan, thank you for the update there. You'll keep us posted, certainly, on anything more that you hear in that regard. But nonetheless, just the mere talk of tariffs potentially being put in place. Canada has already talked about retaliatory efforts on that, in that regard as well. So the Dow, as you see here, has taken that turn lower as we had about 15 from the close. We'll take a quick break. When we come back, shares of Caterpillar are sinking after its report. We drill down on that next. Up next, we'll set you up for Intel results top of the hour. We'll take you inside the market zone next. We're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus, Caterpillar heading for its worst day since September. Seema Modi's going to tell us exactly why. And Bernstein's top chip analyst Stacy Rascon is looking ahead to Intel earnings. You can see how excited he is for those numbers, which are going to hit at the top of the hour. We'll talk to him in just a minute. We do begin with Mike Santoli, though. It's the aftermath, as we said, and the look ahead. The aftermath to Meta and Microsoft and the Fed share, if you want. And then the look ahead to Apple.
Yes, all of that. What's very interesting to me is the market's been able to deal with some of the big guys not having great reports. Microsoft being in big downside weight today and still find a way. Before we got those tariff headlines you were mentioning, we're back to playing tariff tetherball on headlines. This was an unusually comfortable day in the market because you had both very positive breadth and mostly mega caps participating as well, aside from Microsoft. So it was all to the good. I still think earnings are kind of good enough, but investors across the board are going to be tough to please. A lot of stocks getting really punished on bad numbers, including Caterpillar and UPS and Comcast.
Still our parent, Comcast, yeah.
And yet we're finding a way, rotating away. Banks are up nicely. So far, so good. I still think, it's not going to be a slam dunk that we just vault back over the old highs, which is up 1% from here.
Yeah, well, we've come back from that initial tariff knee-jerk headline. As we showed you, Dow's back positive by more than 100 points. Caterpillar not helping, though. One of the worst days in a while. What's going on, Seema?
So, Scott, this was not a strong quarter for Caterpillar. The weak spots being construction and mining. The big story here is that U.S. manufacturing is just not seeing a pickup in activity. That's leading to more inventory being on hand, plus negative pricing on equipment. Caterpillar did not formally release guidance, but its outlook for 2025 on sales was lower than what Wall Street was anticipating. There is a bright spot, though, here, Scott, and that's generators that are used inside data centers as backup. They saw sales grow 22% in the quarter. Executives at Caterpillar recognizing that this is an area of growth and one that they hope to capitalize on. And this, as we wait more details on whether Trump puts those tariffs on Canada and Mexico. On trade, CEO Jim Appleby said he was a bit more positive on tariffs, saying, quote, "We will deal with it," adding that Caterpillar produces region by region and that they have dealt with this story before. Shares down about 4% at this hour.
Seema, appreciate that. Thank you. To Stacey Rasgon on Intel. You just tell me what's most important here, Stacey, to you. We've talked so much about the problems with this company. Where do we go from here?
It's an interesting print because we'll see what happens. Like, I don't think the fundamentals in their markets look great, but really, does it matter? Like, what's more important, if they beat or miss on PCs or servers in the quarter, or who's going to be the new CEO, and what do that new CEO and the board of directors actually have in mind for what to do with the company? What does the whole thing look like in a year, in 3 years? I feel like those are much more important questions than just any of the near-term business dynamics. And to be honest, I don't know that we're going to get any answers to those questions unless they happen to announce a new CEO tonight. And I'm not really holding my breath for that at this point.
I mean, how soon do you need to know who the next leader of this company is going to be?
I mean, I guess as soon as possible, right? It's very hard for them to, clearly the board of directors wants to change direction. I mean, presumably they would have gotten rid of Pat if Mr. Gelsinger, if that wasn't the case. But it's very hard for them to change direction without somebody at the helm. So, I mean, as soon as possible, that would be great. But again, I'm not really. We haven't heard anything. There's been a lot of chatter and names thrown up, but we haven't heard anything in terms of who might land there, and we're not really expecting to hear from that tonight. I don't
really think there's anything else to talk about, honestly, as it relates to Intel. Let me just ask you about NVIDIA before I let you go.
Sure.
Do you feel like enough dust has settled now that you have a clearer view of what all this means this week?
Yeah, all the DeepSeek stuff. I mean, look, we've been of the view that I don't want to knock DeepSeek. They've actually done some really phenomenal things. The models are great, but I don't think what they did are miracles or secrets to the rest of the industry. The whole $5 million number was blown completely out of proportion. And I'm firm in the belief that over time, if efficiencies are getting better, it drives adoption. And frankly, I think we need efficiency improvements. We've gotten them. Inference costs have come down 1,000x over the last 2 years. GPU performance has gone up by leaps and bounds. We need this sort of stuff if we're going to get to the types of compute levels that I think we need if AI is really going to be prevalent. So I'm firmly of that belief. Now, clearly it's impacted NVIDIA because there is a lot of narrative now that's out there, and it's hard to prove a negative. You can't prove it won't be an issue. But I do think after the decline in the stock, it's starting to look quite attractive down here. It was $120 give or take, and I do think even if there's a little more noise over the next couple of quarters, I actually think it's looking attractive at $120. I think that the whole DeepSeek thing, all the fear and uncertainty and doubt's been a little overdone.
All right, we'll leave it there. Stasis, appreciate you as always. That's Stacey Rasgon. Following Intel and, of course, NVIDIA for us. Back to Mike. You heard the 2-minute warning a little while ago. It's all about Apple tonight, which is, once again, as I said at the top of the show, top market cap company again, thanks to the NVIDIA slide and Microsoft pulling back, too.
It is true. Look, they're all kind of bunched together in that 6.5 to 7% of the S&P 500 range. Apple's had this interesting ride where, it kind of looked like it really had fallen out of bed. You've regained about half of it. Still kind of rich on a valuation basis, but maybe expectations are low for the current quarter. NVIDIA, by the way, is up 5% off its low. Why? Well, if there's going to be another $40 billion being handed to OpenAI, guess what they're going to do with it?
They're going to go shopping.
And that's been kind of I think is sort of maybe muted some of the concern about the long-term demand. Meanwhile, if OpenAI gets a $340 billion valuation, that's what Salesforce is valued at right now. It's been public for 21 years. We've never seen this level of investment in a private company, especially over this short amount of time.
It is astounding, to say the least. I'm glad you ended with that point. Mike Santoli joining us, of course, here on Closing Bell. We'll go green across the board. We're not going to get that record close on the Dow, and we'll see what else develops with these, the reports of maybe tariffs coming real soon. That does it for us in the OC.
That's the end of regulation. The American Heart Association ringing the closing bell at the New York Stock Exchange. Hennessy Capital Investment Corp doing the honors at the NASDAQ. Late day volatility for the major averages as markets react to comments from President Trump just a few moments ago about tariffs on Canada and Mexico, but still closing mostly in the green now. Attention turns to another crucial hour of earnings. That is the scorecard on Wall Street, but the action is just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan with John Ford.
Yeah, the countdown to Apple results is on, expected to cross in just about 30 minutes, and we've got a great lineup of analysts and shareholders to break down every angle, including any clarity on China sales and AI strategy.
And it's not just Apple either. We're also going to get earnings in just a few moments from Intel, KLA, Visa, U.S. Steel, and more. But as we await that wave of earnings, let's bring in Barbara Duran of BD8 Capital Partners and Jose Rasco of HSBC Global Private Banking and Wealth Management. Great to have you both here, as we do have, it looks like the major averages all finishing in the green, the S&P up maybe about 0.5%. Jose, I want to go to you first because you talk about the fact that the market or investors continue to reprice this market, and the expectation is that we're going to continue to see strong earnings results. Walk me through how we go higher from here.
Well, I think, look, the deep seek shot across the bow is an interesting one. It reminds me of the 90s when we had a whole bunch of companies doing search, and then some company came along very late in the 90s, by the way, and the winner of that search battle was one of the last entrants in the field. So I think DeepSeek has made it clear to us that it's not just about how much money you have and what you can raise.
Sorry,
it's
hold
what
on.
you're going to do with the money.
Got to interrupt you here because Intel earnings are out. Our Christina Partsinevelos has the numbers. Christina.
That's how Intel is describing their Q4 results. The chip designer is what we're seeing is posting EPS of 13 cents. That is a penny beat on revenues of $14.3 billion, with Q4 gross margins also slightly higher than the street estimate at 42.1%. It's their Q1 guide. That is a bit softer than Wall Street hoped. They're projecting revenue around $12.2 billion. That's the midpoint below the $12.87 billion Wall Street expected. And those margins, they're also heading down. John, I know you and I just got off the phone about an hour ago with the Intel's interim CEOs, co-CEOs, I should say, where Michelle Holthaus explained the margin squeeze. It turns out for products like Lunar Lake, they're buying memory components from vendors and selling them at a cost, which really impacts margins, and they expect margins to be a little bit lower throughout the year. As for the light Q1 guide, she chalked it up to being typical seasonality and then some early purchases in Q4 due to tariff concerns. She also confirmed they expect a ramp in PC sales in the second half of this year. John?
All right. Christina Partsinevelos, thank you. Jose, get back to you on this. You were just beginning your answer there on the market.
Yeah, no, I think, look, it's not just about the money you can raise. It's about the innovation and about what are you going to do with the capital. So now there's going to be, you're going to have to explain the capital, and it's going to have to be reflected in your sales earnings, and that will reflect the price. So I think we have this repricing just beginning. But remember, this innovation is actually going to lead to lower prices to a large degree in this technology, at least in the general sense of the technology. The deeper dives will clearly be more expensive, but they'll be more product specific. I think it's good because it's going to lower prices and potentially lower demand for general AI searches and lower prices, I should say. And that means more people can enter the market. So I think it's positive for long-term demand.
Barbara, I want to get your thoughts on Intel, especially since today The only sector in the S&P that finished in the red was tech, and we know semis in general have really been taking it on the chin as we see this rotation, perhaps still in part due to the DeepSeek fears.
Well, Intel, I think, is a special case. As we know, they've been behind the 8 ball in the AI race, and their business seemed to be normalizing in terms of demand, but their end markets are pretty lackluster right now. And as someone on another show said, the big question right now is the CEO search, because they don't have a long-term strategy. The foundry issue, whether they're going to invest more in that, that's a big issue because that will take away profitability from their core business. So we'll see what they're seeing, but it really looks like there's not a lot of green shoots here. And so I don't think investors were expecting a lot of new information. I think the downside's limited, and we have to see a lot more of a turn before we see more upside potential.
Jose, now that we're kind of past the Fed decision and we've seen this DeepSeek turbulence, what do you expect to really be, wagging the market for the next month or so?
I think what's going to drive the market in the next month or so is similar to what Barbara just said. I think it's going to be management, it's going to be earnings. Cash is great, but what are you going to do? And the sense of innovation, the tech revolution is, I think, just beginning. But at the end of the day, it's going to be that innovation, the next leg in not just AI, but in the technology revolution in general. That's what's going to drive productivity and profitability. And that's why we're still positive on the sector, because we think we're just beginning this. And in the short term, patient Powell is going to be patient and prudent, and that's fine. Remember, the Fed did not move rates a lot in the 90s, and the economy and the markets did really well. So it's all about earnings, and we think earnings are going to broaden out, especially as AI and other technologies get adopted by other companies.
Barb, we're right about at the place on Apple where we were after people were doubting its position in AI. And a lot of the AI story has changed since then. Arguably, players like Apple might benefit from cheaper models being out there. I know you own it on behalf of clients, but what's its role in a portfolio these days? And what do you see as its potential, both defensively and for growth?
Well, it's a good question because I think it has both characteristics. On the defensive side, it really is the amount of cash they generate. And last year they did a $90 billion share repurchase. We expect to hear something similar for this year. Plus, they keep increasing their dividend. And their cash flow keeps accelerating. Their services business, which 5 years ago was 15% of revenues, is now 25, 26%. And that's a higher margin business. So these are the defensive characteristics. And I think they're going to talk about a greater installed base, which is going to, looks like it'll be up like 6%. And so it's about their ecosystem and increasing, the margins and the fat there. So you've got growth right now. I mean, their phone, and we'll see what they say about the iPhone demand. It looks pretty lackluster. The checks have been so-so. And that could be really because they haven't had the full AI rollout yet. It's coming in stages. But they are the typical upgrade cycle is 2.5 to 3.5 years. We're now at about 4.5 years. And there's some 700,000 phones, including the one I own, that are due for an upgrade. Okay. So I think that's the growth part of it, and that'll be later this year. I think we'll start to see that.
Okay. In the meantime, Visa earnings are out. Hugh Son has the numbers for us. Hi, Hugh.
Hey, Morgan. Yeah, so Visa just reported fiscal first quarter results that look like a beat on both the top and the bottom lines. Revenue rose 10% to $9.5 billion, above the $9.34 billion estimate. Profit on an adjusted basis rose 14% to $2.75 per share, also better than the $2.66 estimate. Like Amex and MasterCard before them, Visa said their results reflect strong holiday spending and improving payments volumes, signs of a still healthy consumer. Total payments volumes at Visa rose 9% in the quarter, while cross-border transactions jumped 16%. The stock was up about 0.4%. Last I checked, 0.56%. Back to you guys.
Visa and MasterCard telling a similar story, it would seem right now. Hugh Son, thank you. We've got Decker's outdoor earnings out as well. That stock is moving pretty dramatically here. Julia Boyson has the numbers for us. Hi, Julia.
Yeah, Decker's beating on the top and bottom line, earnings of $3 versus the $2.56 estimates, revenues of $1.83 billion versus the $1.73 billion estimate. Looking at the stock down more than 10%. The question is, what is behind that? If you look at the full year guidance, this is the company's fiscal third quarter. So for the full year guidance, they're guiding to earnings per share between $5.75 and $5.80. The estimate is $5.63. So that is above estimates. But the revenue guidance for the full year of $4.2 $4.9 billion is just below the estimates of $4.93 billion. So given the strength of this quarter, that indicates that perhaps next quarter will be weaker than analyst expectations. And just quickly, Hoka, which has been a huge growth driver for this company, revenues of $531 million, just $1 million ahead of estimates. UGG revenues $1.24 billion ahead of estimates. But it really seems to be that revenue guidance that's weighing on the stock down more than 10%. Back to you.
Okay. Julia Borston, thank you. Jose, I want to get your thoughts on what we're seeing in this environment where the consumer is concerned, because yes, we just got the disappointing guidance from Deckers, but also Visa posting some very strong numbers, including cross-border volume at 16% up year over year. Consumers still out there, at least the U.S. consumer still out there, still spending, but continuing to be very discerning about where they put those dollars to work. How does this continue to play out in the market?
No, remember, inflation has fallen a lot more than wages. So you have real disposable incomes positive, consumer spending in the fourth quarter, 4.2%. And, that's pretty strong. So the U.S. consumer is far from dead. There will be pockets of weakness. There will be pockets of concern. And I think we have to look out for those, and in particular in certain sectors. But on balance, the labor markets look pretty good. And again, if you look at the Fed's commentary from yesterday, they're pretty comfortable where the unemployment rate is, where wages are. Wage gains have slowed. I think we'll see a pop in January just from the seasonal distortions. But consumer looks relatively healthy, even though we're seeing a pickup in some of the lending data and some of the loan data. On aggregate, it looks pretty good.
All right. Jose, thank you. Barbara Duran, we'll see you in just a moment for Apple's results. Now, KLA, back to the chips, results are out. Christina Partsinevelos has the numbers. Stocks headed higher.
Yeah, that's because it's a beat on the top and bottom line as well for the guide. So what we're seeing, this is a company that makes equipment for chip makers, and EPS came in at $8.20 adjusted, higher than the street anticipated on revenues of about $3.08 billion. The Q3 guidance, so Q3 EPS a midpoint $8.05, also higher, and Q3 revenue of $3 billion. So that was a beat on the guide. And I'll just read one quick line here. KLA's December quarter results were above the midpoint of their guide ranges despite navigating through the business impact of new U.S. government export controls released late in the quarter. And you can see the stock jumping 4% on this news. John, Morgan?
All right. Christina Partsinevelos, thank you. We have more breaking news on tariffs. Megan Casella has the details. Hi, Megan.
Hey, Morgan. So President Trump making a lot of news just now in the Oval Office, officially announcing he says that he will be placing tariffs of 25% on Canada and Mexico on Saturday, February 1st. Now, he had previously talked about this and had previously given something of a negotiating window, saying the two countries could do more to shut down their borders, but now saying that he will be imposing these tariffs on Saturday because of three reasons. People coming into the country because of drugs and fentanyl coming into the country, and because of the subsidies he says we're supplying to those two countries in the form of trade deficits. So he says because of those big deficits, he has to impose these tariffs, and that these tariffs may or may not, he says, rise with time. On oil specifically, he says that he's making the determination tonight on whether or not he will include oil in those tariffs. So those could be carved out. He says probably tonight he will make a decision on that. Obviously, big impact there, given that oil is a huge part of this trading relationship, really with both countries, with Canada and with Mexico. And then finally, guys, he also talked about China just a little bit, but much more vague here. He says he's thinking about doing something on China because they're also sending fentanyl into the United States because of that, hundreds of thousands of deaths. So China, he says, is going to end up paying a tariff on that, but he's yet to make that determination on what exactly that will be. So as of now, 48 hours out or so from that Saturday deadline, Trump says as of now that 25% tariffs will be taking effect on Saturday on Canada and Mexico. Guys.
All right. Megan Casella, thank you. After the break, longtime tech industry insider and analyst Patrick Moorhead joins us with his first take on Intel's results.
And we're just minutes away from Apple's first quarter earnings report as questions swirl around competition in China and the company's AI strategy. We're going to bring you those numbers as soon as they cross. Overtime is back in 2.
now.
Welcome back. Atlassian earnings are out, and the stock is surging. Seema Modi has the details. Seema.
Morgan, this is one of those software names that provides productivity software to data centers. Earnings and revenue handily beat street expectations thanks to a 30% year-over-year jump in subscription growth. CFO says strong enterprise sales execution driving better than expected revenue across both cloud and data centers. Q3 guidance also above consensus, and that is what is helping shares outperform by 19% here in overtime. John and Morgan.
Yeah, nicely above. As well. Seema Modi, thank you. Meantime, shares of Intel are now higher by almost 2% after posting fourth quarter results. Joining us now is Patrick Moorhead from More Insights and Strategy. Pat, good to see you again. We're back to talking Intel. Their Q4 numbers were pretty good, but they had some pull forward from Q1. Their guide was particularly weak on the top, but was there anything here in this weaker guide not to expect? Anything new on the downside?
No, there really isn't, John. And I think the expectations here were anything that wasn't a disaster would be a positive. I mean, they didn't miss on their guide, but they did hit on EPS and revenue. But if you look at the foundations of the different businesses, every one of the divisions except data center did pretty well. And I know that's a bit of an oxymoron because data center is so important. But all in all, it was pretty good news on the quarter. I'm particularly interested in what comes out in the call, though, because that's where we might have some interesting conversations.
Got a bit of a paradox, it seems to me, when it comes to Intel in particular. We've got all this talk out there with the AI environment, Stargate, about building data centers. Intel's particularly experienced in building data centers both domestically and around the world, but it doesn't have that convening power right now because its product track record has been particularly weak, and it tripped up on fabs as well. What's the prospect of, through the foundry business, Intel recapturing that mojo that will allow perhaps some partnerships or some alleviation of the capital burden it would face to pull that off?
Yeah, so John, I think getting back to its original mojo, where it had 95% revenue share in client in the data center with CPUs, I don't see that happening. But to the foundry question, I am hearing some very good things about 18A. And what happens is you won't get an all-in from somebody like an Apple until they have a demonstrated track record with, I will call it the easier stuff. And this is why the Amazon commitments and the Microsoft commitments so far to Foundry were for networking chips, okay? I do believe once they demonstrate and show the confidence of that, which primarily they can do this with their own products like Panther Lake on the PC side, then people will come likely around 14. So it is positive news, hearing some good stuff about 18A on the foundry side. And right now, the street is really about show me. It's not the potential. They want to see the delivery of Intel.
I do want to go back to data centers and the AI ecosystem more broadly with you here, Pat. And that is, we had the reports this afternoon that OpenAI is apparently in initial talks to raise up to $40 billion in a new funding round at a $340 billion valuation. We also know Sam Altman's down in Washington to tout offerings for government uses as well. You take that, you layer it on what we heard from Microsoft and what we heard from Meta last night as those companies and those CEOs double down on their CapEx plans and their investments into AI. Where does that leave us now? And I ask you this because you joined us on the DeepSeek shakeout that happened Monday in the markets. Where does that leave us in terms of investing, this AI ecosystem, and who the next tranche of beneficiaries are going to be?
Yeah, so if I said I'm going to be very consistent, if nothing else. This AI build out continues at least for the next 18 months, and DeepSeek changes nothing. What it does, well, not nothing, what it does do is potentially lowers the cost of compute for reasoning models, which benefits companies like ServiceNow, Adobe, and even Microsoft. But until we hit AGI, and we're doing inference on everything with AGI, this continues. This build out continues, and as we saw with Meta and Microsoft, and I think we're going to see with Google and Amazon, it's pedal to the metal on CapEx. DeepSeek really didn't change much as it relates to investments. Reasoning, this decrease in cost was expected. It just typically doesn't get this amount of fanfare, but with Stargate coming out and looking at that $500 billion build out, the timing exasperated the market's reaction to it. And with the NVIDIA run up so much as anything but a cough, a whimper of an NVIDIA bull case, the market will react. And that's what we're seeing right now.
All right. Patrick, stay on the line, as they say in radio. Apple earnings are just a few minutes away. And
plans to slash deliveries for its largest customer, Amazon. We're going to hear from UPS CEO Carol Tomé about that major stock move.
.com.
Welcome back. U.S. Steel earnings are out. The company matching both top and bottom line estimates with a loss per share of 13 cents on a revenue of $3.51 billion. Those results both in line with drastically reduced estimates after the steelmaker had warned last month. Now, U.S. Steel saying it expects first quarter adjusted EBITDA in the range of $100 to $150 million. They did not comment on M&A, and you can see shares right there basically flat.
Well, the final countdown is on. Apple results expected to cross in just moments. We're going to bring you the numbers and analysis right after this break.
精彩呀！
We are moments away from Apple earnings. Back with us, Barbara Duran and Patrick Moorhead, along with CNBC senior markets commentator Mike Santoli and Tom Forte, who is senior internet analyst at Maxim Group. Mike Santoli, tell me about Apple's role in the mega cap mix in this market thus far and how it's different from the other names we talk about.
It's pretty fascinating. Had a great.
Have you ever wondered how the rich keep getting richer while broke?
Defensive trade, something that felt like a bit window dressing. Massive correction into early this year. It felt like people just had the preference for stuff with a greater direct leverage on AI. And right now, it was fascinating to see the rally on the deep seek news, simply because whatever company are kind of touching customers and interfacing them with AI seemingly all of a sudden was going to be the way to go. So it's right between the recent high and low. It's still an expensive stock. It's 31 times forward earnings. I feel like expectations for the basics like iPhone sales not particularly high, but everyone wants to hear that story get a little more in vivid relief about how they're progressing on the Apple Intelligence front.
Barbara Duran, not a sense that Apple's driving the overall market necessarily, but the way it touches China, and you talked about it being both defensive and growth in nature, certainly tells us something about the overall environment.
No, it does. And I'll tell you, it's going to be interesting what they have to say about China, because they're obviously losing share there. We'll see what they've been doing in terms of discounting and what the prognosis is, because China, it seems to be a combination of, not made in China, their price points. And of course, there's worries about tariffs, although they seem to have navigated that pretty well in the past, both with the administration and with Chinese officials. So I think there's a lot that we're going to find out there. But again, I think this is really iPhone driven. I think investors are patient given the number of positives, margins, capital, and we'll wait to see how the worm turns, because that is over 50% of their sales is iPhones.
All right. Well, we're seeing the stock move around on the screen, and that's because we have the results. So let's get over to Steve Kovac for those. Steve.
Hey there, Morgan. Yeah, it's a beat on the top and bottom lines for Apple, but we are seeing a sales dip here for the iPhone business and in Greater China. I'll get to those in a minute, but let me read you the results here. EPS is a beat, $2.40 compared to the $2.35 the street wanted. Revenue, a slight beat here, $124.3 billion versus $124.12 billion expected. iPhone, though, here, a rare miss, $69.14 billion versus the $71.03 billion. That's down a little bit less than 1% year over year for the same period, about 0.8%. Services, though, a bright spot here again for another quarter. That was a beat at $26.34 billion versus the $26.09 billion expected. That's up nearly 14% year on year. And then Greater China, this is the story I think we're going to be talking about all afternoon, guys. Down 11%, that business, to $18.5 billion. We see shares, let's call it flat-ish for now, guys. I'll send it back over to you.
All right. Steve Kovac, thank you. Yeah, shares of Apple are down fractionally right now. Tom, I want to get to you for your reaction to this, especially since we were just talking about China. And it does seem like, despite the holiday season, perhaps, and maybe largely because of China, you did see that sales dip in iPhone. The upgrade cycle is not manifesting yet here.
Yeah, so definitely I think what you're seeing is that as it pertains to this super cycle that some investors were hoping for from artificial intelligence is either incredibly slow developing or it's not happening at all. But what encourages me when you look at the outperformance is the strong services. And I do think that there is a way for the stock to continue to work on the strength of services despite not seeing a super cycle as it pertains to AI and iPhones.
Pat Moorhead, want to get your reaction to the print we just got, whether it is China, whether it's services, whether it's the fact that Mac revenues had a handy beat as well.
Yeah, we knew that iPhones would come in light, and the only thing that could save it would be services, which it did. What I'm looking to, though, is the future in China. I think it gets more difficult, not easier for them, because all the Chinese manufacturers are going to amp up their AI capabilities, and Apple really hasn't even shown up there in China, and not even a lot in the rest of the world. I think that the Mac bump is a positive sign, but I don't think it portends anything momentum about the future. And in fact, Apple has more competition with these new Copilot Plus PCs from 5 or 6 manufacturers and 3, soon to be 4 chipset manufacturers, where it could get a little bit more difficult. It's a lot easier to flip somebody on a Mac than it is on an iPhone to Android. But I think Apple's job is going to get even harder in the future.
And the stock is bouncing around between fractionally higher and fractionally lower. Let's get back to Steve Kovac for more on Apple's results. Steve?
Yeah, John, I caught up with Apple CEO Tim Cook on these results. Hopefully we can get a little more clarity on what's going on here. First of all, I want to talk about what he told me on artificial intelligence, Apple Intelligence, and how that's informing iPhone demand. I know that's the question of the hour here. Let me tell you what he told me. This is a quote. Quote, we saw that in markets where we had rolled out Apple Intelligence that the year-over-year performance in the iPhone 16 family was stronger than those markets we had not rolled out Apple Intelligence. So there you go, saying that Apple Intelligence was a sales driver, at least in the markets where it was available. Obviously only available in the United States at first, and in
right after 9/11, about 10 days after.
Others, more languages are coming. And then the China question, again, like I just told you, those sales are down 11% year on year. I was here a year ago when they had a 13% dip for that holiday quarter. Tim Cook had several reasons behind this. Part of what I just told you, artificial intelligence has not launched in that country yet. They still need the regulatory approval from the government there, and they need to find another AI partner based in China, whether that's Baidu, whether that's DeepSeek, or some other Alibaba, some other company, in order to take the place that ChatGPT is using elsewhere for the Apple Intelligence system. He also had a couple other things, blaming some inventory channels, and also talked a little bit about, this was a little confusing to me though, talking a little bit about subsidies from the government for devices that went into effect this year. I'm not quite sure how that affected sales last year. Maybe the idea here is that people waited to for those subsidies to do their purchases in China, but that was an explanation for that. And then finally, I asked Mr. Cook about tariffs. That is a huge question in this new Trump administration looming over Apple and so many other companies. He pretty much dodged that. I asked him if Trump has given him any indication that Apple may be able to miss those tariffs again like they did in the first administration. He said they're preparing, they're evaluating what tariffs would look like, but otherwise declined to comment on that. Right now, you guys see the market still trying to figure this out. Shares are about flat or so on these results, guys.
Yep, still bouncing around a bit. Steve Kovac, thank you. Mike Santoli, I'm going to go back to you now on this. You're talking about Tim Cook and his approach to statesmanship. Unlike a lot of tech CEOs in Silicon Valley that are just kind of showing up on the political scene, Tim Cook has been photographed sitting down with Xi in China a decade ago, got close to Trump, managed to avoid getting hit with serious tariffs last time around. With all the talk about political and global impacts, how do you think that positions Apple as a stock?
Yeah, I mean, I don't think it is necessarily the key swing factor here in the stock, but the general idea that Apple is essentially too big to marginalize or too big to penalize on any of its businesses, I think is pretty much one of the reasons why we're here at $3.5 trillion in market cap. So I don't know if we're really trying to parse too finely exactly what tariffs might come, whether they can escape them or not. But, you know, things have to start working pretty well here on the iPhone side globally for the story to kind of reaccelerate, I would imagine. You had this pattern when there's been a not so great upgrade cycle for Apple, and quickly the street kind of turns it into a positive and says, well, that's that much more pent up demand for upgrades down in future quarters. I'm not sure that's quite playing out right here or quite as persuasive. This stock is traded in the last month at 240 and at 219. And here we are at 238 trying to figure out, if it makes sense to tilt one way or the other. I think it's fine to just be hanging around these levels and holding up here and waiting to see it all play out.
Barbara, I think about, bear with me here for a second, but I think about the luxury fashion stocks that have been hit so hard in the last couple of years, in part because of the weakness that they've seen in their businesses in China. And it's been a turning point for some of those fashion houses this earnings season because North America and the consumers here in the U.S. have been showing up so strongly for those brands. It almost seems like investors are starting to de-risk the China piece of those companies' portfolios. Are we going to see something similar happen here now with Apple?
Well, excuse me, Morgan. I don't think that's going to happen here because the problem in China, of course, is the consumer's not spending. And we're well aware of the China economic issues. And Apple, I think there are a couple factors there. One is that they don't have the AI ready to go, and that could take a little longer. And maybe they do something with DeepSeek, but we know about the censorship that's going on with DeepSeek, and that's a big problem for Apple to use ChatGPT. So I think that probably is taking a little longer. So we'll see when that happens. But I think they were losing share before AI was introduced in their competitors. Mm-hmm. And part of that was their price points, and part of that, I think, is made in China aspect to this.
So, Tom Forte, there's a glass half empty and glass half full way to look at this, it seems to me. We heard from Steve Kovac that Tim Cook said that in markets where Apple Intelligence was out, the iPhone sales were stronger. Apple's been kind of letting this Apple Intelligence marinate for a while. Still, I don't think it's completely even rolled it out in the U.S., So do we look at the upgrade cycle this time as being driven by software more versus hardware? And so that's a good thing because there's the possibility for them to pull ahead? Or is it such a bad thing that they don't have it out yet and we're not seeing it now?
Yeah, so I think, John, we have to hang our hat on the software driving the upgrade cycle, given that they had the hardware, the iPhone 16
soon to be
in October, or September rather, and then it's been a long and slow rollout for the software, and they still don't have it globally, and they may never have it in China, or may never have it for some time. But I do think that that is kind of a glass half full statement that in markets where they've had Apple Intelligence and the AI-related software, their iPhone sales have outperformed other markets.
Yeah, really fascinating comments there. All right, we're going to leave the conversation there for now. Tom Forte, Patrick Moorhead, Barbara Duran, and our own Mike Santoli. Thanks for breaking it down for us with shares of Apple down fractionally right now. We've got much more reaction to Apple's results. That's coming up next when we are joined by the portfolio manager of T. Rowe Price's Science and Technology Fund. Plus, we'll dig into UPS's worst trading day ever and hear from the company's CEO about how tariffs could impact her business.
And cue the QR code for the latest installment of my On the Other Hand newsletter. This week's debate is the arrival of DeepSeek a threat to U.S. tech. You can scan that QR code on your screen, type in cnbc.com/OTOH to join the conversation.